We're excited to host this live webinar on geospatial data for property intelligence. As we all know, the insurtech space has advanced a lot over the last few years. There's a lot of innovative data solutions out there. What we've also seen and heard is that many property and casualty insurers still struggle to create and maintain an authoritative and unified database across their firm. On one hand, we have the complexity of managing such data sources. And on the other hand, the need for such data, the need for accurate, up-to-date data is critical these days, especially given the rising climate risks and other external factors that play on your portfolios. Let's meet our presenter for today, Matthew Schmidt. Matt's a senior associate in our insurance team at Ecopia. Many of you are familiar with Matt, and for those who don't know him well, here's a quick intro. At Ecopia, Matt helps top property and casualty insurers to use innovations in their geospatial data solutions to transform their risk assessment, underwriting, as well as claims management workflows. Prior to Ecopia, Matt was a senior account manager for insurance clients at Esri. Matt is an avid GIS enthusiast and graduated in geography from the Minnesota State University. Matt is based out of Stratham, New Hampshire. Let's go over to Matt to learn how AI-based mapping can help make it easy for insurers to keep foundational property data up to date and also enhance their decision-making when it comes to underwriting, claims, and risk management. So over to you, Matt. Take it away.
Awesome. Thank you. And good to see those emojis going on. All right. So I'm going to switch over to slides here. Everybody can see everything. Harneet, can you just double check so I can...
Everything is good. You're good to share.
Everything is good. Everything is gravy. All right. Sounds good. So thank you all for joining. I know Harneet already thanked you. I'm thanking you as well. And thank you for reviewing. If you're looking at the recording a little bit later or a little bit at your convenience, thank you as well. So in today's talk, we're going to give some insight on our vision, who we are, the growing challenges of our industry, and this little promise that we tend to believe in as geospatial professionals in the insurance space when we're working with risk. And how can we create that gold standard for geospatial data in the industry? And I'll get more onto that geo promise, but over my 8 years working in geospatial insurance, I've met many of you. We've talked about how every property has a location. Hazards are increasing in frequency and severity, and the models that are used to predict these are continually growing to evolve. And there's plenty of platforms to organize this data and extract insights where from where your exposure is to what can happen to it. And then there's a select few out there that they have the best understanding and have been growing, especially in riskier states as well. So kudos to them, and kudos to you for being here. All right, so Ecopia fits within this equation by providing a comprehensive view of the built environment. So what we mean by that is everything you need to know about those policies, those structures that you're either insuring or declining, whatever it may be. The built environment needs to be represented well on a map so you can best understand it. We've been growing towards this vision for the last 10 years with many local and international groups. We support them through just understanding, planning, and then ultimately action for whatever challenges they may be facing. We support many carriers specifically, including 7 of the top 10 United States carriers, along with 2 of the top reinsurers in the world. So we're on the reinsurers, talking about them and how they're utilizing us. You can see them on the screen. All right. So when we're talking about challenges in geospatial, we're talking about challenges in insurance and how they collide. We have to address the growing impact of climate change to our world, to ourselves, and also the organizations that we represent. So in this little graphic from NOAA, one of our partners, I'm talking about the growing threats that are caused by the changes in our world. So fires, increase in tropical storms, heat, flood, drought, severe convective storms. All of these individual events start adding up. And so when we're looking at, the growing impact, we're acknowledging that there's a lot of events, but also there's a lot of events that are happening to our direct portfolio. So we have to think about them intelligently. And the best way to map that is by looking at how it impacts our own policies. And so when we take a look at just one of those perils, flood, or future-facing risks, we notice that climate impact misrepresented flood policies in the results of millions of dollars. And not just policies, this is all of the population of the United States. But, when we take a look at this $43 billion probabilistic risk to our own individual portfolios, it's not a material effect. So best understanding the location of our policies, best understanding the likelihood of flood by combining all sorts of fun models against it, allow us to make better decisions moving forward as an insurer. So to look at the broad spectrum, these events are changing our industry, increasing the costs across the insurance lifecycle. The obvious is claims losses, right? So looking at that, looking at the operational costs that increase with the frequency and severity as well. Our task is also to reinsure and underwrite accordingly so that we're providing a better service to our customers, staying afloat, and growing sales. Of course, you can't go without mentioning, with the growing climate change and risks associated with that, you're looking at reputational costs as we pull out as certain insurers pull out of select states. Luckily, there's this promise that geospatial tools will wave the magic wand and mapping will save us all. So I've spread that gospel at past lives, and I still think that geospatial can help us. There are the specific promises and plenty of stories how geospatial tools are helping carriers deal with these challenges. Most are on individual stories, where a simple claim map can save millions in allocating adjusters, or where imagery is being used to detect damage for automated payouts. I will say that there are a few characters doing an incredible job in squeezing the value out of their geospatial tools at an enterprise level. More often than not, I've seen a lot of geospatial stacks get siloed in a particular business unit that is not utilized by the enterprise, and these stacks can get costly and even costly to manage at an individual group level. So these stacks obviously are getting costly, and they get more costly as the groups that use. Let me rephrase that. It's even more costly when we're looking at paying a third-party provider to provide a specific point solution for a particular need. Now, that need might evolve over time, therefore we're not needing that solution, and therefore it goes to waste. But that's not without cost to the company that's buying it for that particular time. It could be 1 year, it could be several years of not using this system, but we needed that. We might need it now. So there's a lot of geospatial redundancy, a lot of geospatial waste when it comes to these individual point solutions, as well as these larger geospatial stacks. These platforms that, help geospatial at an enterprise level look like this. No, they don't really look specifically like this, but if you've worked with me in the past, you've seen me draw out a similar diagram where most carriers have something like this. This is a very rough outline of a geospatial architecture. You have the data tier, particularly at the line of business level. And then you have the analysis tier, which comprises the geospatial engines, and those are processing the magnitude of layers. The application tier, just above that, is for front-end usage. Think your claims dashboards, BI tools. and the third-party built applications that help us visualize our own data. When you have the third parties, then you have the third-party services on the side there. It's kind of independent of the database analysis and the application tiers. There's where you're going to have, your geocoding engines, your weather feeds, models, and real-time observations like power outages or grid health. You name it. There's tons of third-party services that we can pull into our own system. Building and maintaining these systems takes a lot of expertise, a lot of standardization, consulting, nurturing, and heck, a lot of babysitting as well. And it gets more complex as we roll this out to our IT counterparts who are in charge of building this resilient system across the enterprise. And so instead of it looking simple like this, it's starting to look like this, where we have just a ton of different instances of the exact same stack. That's to build it out and make sure that it's resilient, running extremely well across the enterprise, because these then are supporting mission critical systems. Now, that's in an ideal state where you're having your stack look like this and everything standardized and beautiful. The reality of this is that, there's growing costs associated with it, and each insurer spends millions of dollars on geospatial enabled systems or tools. And these tools can take many forms and support different, either mission critical applications or, some are just, standing on the side, supporting the specific tool or need that's or a business unit that's needing that tool. And that's where there's this waste that kind of comes into play. Sure, it could provide some value, but there's a compounding value of all these different geospatial tools that we need to really squeeze that juice out of. And so where's the link? How do we get compounding value from all of these systems together? And how do we squeeze as much value out of these tools? Or at least prioritize what we really truly need. So with that, we're going to take a look at, the simple GIS 101. So plotting that location on a map and getting a pin. Now, I know with a lot of carriers, we're not talking about not one policy, we're talking about millions. So everyone here should be familiar with geocoding or have a geocoder in place, whether it's Ecopia or hopefully soon to be Ecopia. Wink, wink, nudge, nudge. We're generally not looking at that single policy, right? So we're challenged with millions of these pins. And for the sake of today's conversation, let's talk about a good story of visiting my friend in Northern Illinois. So GIS 101 and geospatial insurance 101 is getting that location, that policy on a map and represented extremely well. And we do this through the step of geocoding. Now, for your convenience, I did it on 5 geocoders. I took the address in Kent, Illinois, and I used 5 different geocoders. One failed, maybe a user error, but that's another story for standardization. One was on the wrong road about southwest. You can see it on the map here in dark, that D. It was off by about a mile. There was 3 that were within the parcel. So let's talk about that. So the 3 within the parcel, they were in different locations, as you can see there. 2 are in the middle and 1's over by the structure. Now let's talk about why this occurs. Not all geocoders are built the same way. We started geocoding, and a little history lesson for the insurance folks here is one of the very first geospatial tools or electronic location systems was from Chubb in 1997. And so at that stage, we were geocoding as if we were delivering mail by using that street network and identifying essentially where the mailbox was. Now, that wasn't a good indication of risk. And as parcel geometries got digitized and made readily available, we're able to take that and have a parcel centroid to then map out the risk. That increased the accuracy by quite a bit, but it only hits the structure a little over half of the time. Not until 2018 were we able to get true building-based geocoding, which takes a shape of a building with the centroid, that dot on the map that we're all so keen about, and dropping that on the actual building, which sways a lot of geocoding to the actual structure rather than the parcel. And so from there, you can get a much better representation of the risk that you're entering into your databases. All right, so we established how they're different and why they're different, how we're kind of evolving to get a more granular geocode. But it still doesn't solve the problem of a single address can have many results when we're calling different geocoders. So back to our friend in rural Illinois. As you can see, the parcel is a fun, odd shape. It's large and a half-mile long from north to south. And like many rural parcels of land, the primary structures are in a very small portion of this parcel. In this example, all the parcels are towards the northern edge of the parcel. When I first visited this farm, it was during a road trip, and it was 3 years ago. And it was during a road trip with my family. We had our camper on the back of the car, and we drove from New Hampshire along I-90. And in a couple of days, we're pulling up to this wonderful farm in the country. And like we all do when we're unfamiliar with a location or a destination, we're entering in the address into our phones, or in some cases, you enter it into your dash. But either way, when you're off by a quarter mile, you're going to get lost. And in this case, we thought, we drove by this house. We're like, that looks like that's his house. And it was, but we kept going a quarter mile because we were a quarter mile away. So there, what we found is cows. While they were nice cows, and my kids would watch and hang out with them all day, I was there to see my friend and his family. And we had to pull a U-turn with the trailer in the gravel road to see if the house we passed was the right one, and it was. But while it was a personal inconvenience, it's also an industry challenge. How can we correctly price risk and service claims effectively if we're so far off the mark? And luckily, there's better options in the market. And that's where the footprints come in. So in come the footprints, and that's what ties this all together. If we used a better geocoder, we would have had a much better, easier time finding my friends. And not only that, but we have individual footprints for each insured structure. We have a standard address, a standard parcel. The footprints all have a unique identifier with each structure. And so with most rural policies, typically they have the primary residence on one contract or one policy, and then all of the outbuildings are kind of binned all together. So my question to you is, if you're writing rural residential or small business, is how's that done without a unique identifier for each structure? Pose a question. You can send me a text or email, let me know, or type in the Q&A on the webinar. Let me know on that one, because I'd be curious. From here, when we have that unique identifier and all of the shapes of the footprints within that parcel, we can identify those barns and file them and apply all of the attributes associated with that structure as well. They could be big barns, they could be little grain bins, but every structure on the property has their unique identifier, the associated coverage amount, the inspection notes, even the attributes, which we'll talk about in a bit. So back to looking at this at a portfolio level. The address can lead us close, but it can differ amongst different tools that we're procuring as geospatial insurers. So when we take a look at those 5 different locations and we take a look at our individual tools that we're using, there's various results. And they all of these tools have a different geocoder unless we take control of it. But these miscellaneous tools can have a homegrown geocoder within it. Looking at you, some of the modeling agencies, some are purchased through partnerships, through like an insurtech. And so if we're able to take some of those, and we can talk about this in a second, but if we're able to, standardize all of this, we can then have one location amongst several tools looking at the same exact point. So this is, if you're the average carrier who sends an address to those miscellaneous systems, now we'll keep it simple and do just 4 systems, but we all know that there's more than 4 systems. You're getting just as many results as you have tools, and trusting these systems to process your property data can get you different results as they're likely calling different geocoders. There's a way to take ownership of this and standardize your work and improve the communication across the enterprise. And we first do this by eliminating sending an address to your geospatial providers, unless they're a geocoder, of course. But in a different webinar with Swiss Re, they noted that most policies they receive have poor or inconsistent address data, which is why they recommend to the carrier to send them the latitude and longitude rather than an address. This is also why we recommend a standardized geocoder that's at the enterprise level. And so this model at the enterprise level should look a lot more like this. Here, we have a clear identification of the property that's in underwriting, that's in claim, that's in our agents' networks quoted with pre-fill. That way, we're all standardized the data. We collect a better understanding for our respective portfolios while also lowering our vendor costs. I mentioned it just a little bit earlier, but if you're working with an insurtech ask them who their geocoder is. And if they're saying, they're utilizing a map box or, insert whatever geocoder that's available for the insurtechs, you could then negotiate with them. We're going to send you the latitude and longitude. You don't have to geocode it for us. Therefore, you're reducing the cost there. So how do you start this? 1, I suggest taking a good look at the list of systems, geospatial adjacent systems that you have. Also consider your geocoder. Evaluate and ensure that you have the best location represented, and also double check to see if it has a unique identifier. I know some of them do. But we need to make sure that it's for each building you insure. If there's not, consider evaluating new products. Wink, wink, nudge, nudge. You can evaluate with us for free. So yes, that is that. I'm going to do some closing thoughts here. So I mentioned about, number 1 is taking control of your geocodes and sending that out to your carriers. But there's a new wave of AI-derived tools that are available for us to make a smarter decision on what we're actually writing. And that coincides with our vision of providing that comprehensive property, the comprehensive property attributes for every single building on Earth. So these are attributes considering like your flood risk, first floor elevation, roof scores, roof shape, roof geometries. All of these things need to have a place to land. And without having that core shape, the core attributes, the core unique identifier that's associated with your policy and all the geospatial shapes and layers that you have, a mismatched hodgepodge data collection that you can't get the most value out of. So how we deliver this is first through our own processes. One, we started with the foundational geometry and ensured that that is as accurate it possibly could be in the latitude longitude sense. Then we needed to make those layers queryable by applying a geocoder or an address locator to these shapes so that they could be easily queryable. Now, going down that tabular data set, now you can get into adding your roof geometries, the size, the pitch, whether or not it's a classification of whether it's steep or high. The first floor elevation can just be a value associated with it. So all of these different data elements are then tied to that master record. And then that master record is your master record. And you can send that location out to any third-party modeling service that you want. And then you have that compounding benefit to enhance the attributes and the both from third parties and your own to best understand, what's actually happening here and having a one true view of risk, which allows you to follow this model, right? So through this process, you can simplify your geospatial journey and grow the business and deliver that geospatial promise and make it a geospatial reality to your organization. And so with that, that's what we have for the gold standard of geospatial.
Appreciate everyone's time and for you as well to do this with us today.